In this latest video, we're going to take a look in a bit more depth about what actually moves the foreign exchange market. So we're going to look at what government announcements and news you need to keep an eye on when trading Forex. Hello, I'm David Jones from Capital.com, and this is the latest part of our How to Trade Forex course. We're now going to start digging into things in a bit more detail. Next time around, we're going to start on trading strategies. So make sure you're subscribed to never miss out on that new content. But first of all, let's just spend a bit of time looking at what major announcements and what sort of news can really move foreign exchange markets during a typical trading month. Potentially, there are lots of different announcements that can have an impact on the market, but month in and out, I think there are some real key ones to keep an eye on. So without further ado, let's get into that. Let's take a look at what actually moves currency pairs around, and as traders, what we need to be watching during the week, the key announcements that we need to keep an eye on. Let's start off with a high level view of what to watch when it comes to foreign exchange. First of all, government announcements. So for example, monthly unemployment numbers can give us an idea as to how healthy or not an economy is. These tend to be closely watched. Also, announcements from central banks, whether it's the Bank of England, the US Federal Reserve, the European Central Bank, the Bank of Japan, on interest rates and how they see the economy. These can also play a major part in short and medium-term volatility for foreign exchange markets. Then, of course, there's wider news. In recent years, we've had Brexit. We've got concerns about trade wars between the USA and China, for example. So these larger economic factors will also impact various currency exchange rates. And finally, there's market sentiment. We'll look at a couple of examples when we come to the end of this. But just the overall momentum in a market, can increase the volatility and have markets overshooting in both directions. So we'll take a look at that. Let's deal with government announcements. So these are released on a regular schedule throughout the month. So every month we have, for example, unemployment data, inflation data, this sort of thing. And these are really the two, I think, to watch, plus GDP. So GDP is gross domestic product. Is the economy growing? Is the economy shrinking? Is there a risk of recession? So for example, if we saw, let's say, the Eurozone, some of the major economies there slip into recession, that could well influence how the central bank reacts, which has an impact on the currency. So all of these things are tied in together, but these are some of the main ones to watch. Then we have central bank announcements, interest rate decisions. We have been in, for many years, a low interest rate environment, although rates have been creeping up over the past year, 18 months or so, particularly when it comes to the US. But typically there'll be one announcement a month from a country's central bank. So even if they don't change the interest rate, they will often provide commentary around how they see the economy for their particular area evolving. And these sort of statements, again, can inject volatility into the various foreign exchange markets. So even if there's no change expected, it's still a big announcement to watch. In the US, it's the Federal Reserve. For the Eurozone, it's the European Central Bank. For the UK, it's the Bank of England. And in Japan, it's the Bank of Japan. So when this announcement is due to be made, there's normally an expectation about what's going to happen. So it tends not to be a surprise, the actual announcement, but also they will often give guidance and maybe hints as to how they see rates moving in the future. So more often than not, it's their look forward that's the important part of the announcement rather than the decision itself. Let's move on to wider news. This really can be anything that we think could potentially affect a country's economy, and that will have a knock-on effect for its currency. If an economy is shrinking, then usually the currency will be falling as well, and vice versa. In times when things are going well, the performance of the currency is often seen as a vote of confidence in the economy. So what sort of things do we need to keep an eye on? Well, trade wars, for example, that's something that has definitely increased in importance in recent months. So the threat of, for example, the US imposing tariffs on China's export to America, or the export of European cars to the US. So the trade wars here can really have an impact. Brexit, of course, has been a big factor for both the pound and the euro for the past 2.5 years now. So it's the actions of politicians can really have an impact on the currency market if they think that's going to affect the country's economy. Political instability, if we saw a lack of confidence in a current government in one area of the world, that can cause a loss of confidence in that country's currency. Something maybe less tangible is market sentiment. And I think maybe the best way of illustrating this is to go through some examples. Because trends can take on a whole life of their own. Often, if a market starts moving really strongly in one direction, it fuels more people to take positions in the same direction, and so it carries on. On the downside, selling sparks off more selling. If we see a currency maybe really starting to crash because that country's economy is in a mess, then as there's more and more selling, it can fuel more aggressive selling, pushing that currency ever lower. Let's look at a couple of examples. First of all, the UK Brexit decision in 2016. So on the day of the vote, the expectation was that the UK would vote to stay in the European Union. Pound US dollar briefly touched 150 on the night of the vote as the polls closed. But as the evening went on and into the early hours of the morning, it suddenly looked as if the UK could actually vote to leave the EU. Let's see what happened next. So there's the move. You can see a massive turnaround in sentiment. The pound really collapsed overnight, and there was an element of panic in the market, and that brought out more sellers. So we saw over the course of little more than 24 hours a 1,800 point turnaround in the fortunes of the pound against the US dollar. So trying to go against that sentiment, there was just so much pressure on the back of the vote to leave that it did really fuel more selling, and we saw the market pretty much collapse over a couple of days. Of course, markets can get carried away to the upside as well. A great example of this, the cryptocurrency bubble in 2017. Let's take a look. It was probably the late summer of 2017 when things really started to move. We're looking here at a chart of Bitcoin. It was trading around about 2,800. Let's just jump forward a month. So a month later, the price had increased from 2,800 to about 4,800. So this is the thing when the frenzy was maybe really starting to take hold amongst the wider public, and more people moved in to buying Bitcoin because they thought the price would just carry on moving higher. Let's jump forwards again. So by mid-November 2017, the price of Bitcoin had touched $10,000. So people who'd bought were sitting on open profits. There was lots of press saying about how high Bitcoin could go. It was going to change the world, and there really was a frenzy building. Let's jump forwards again. By mid-December, the price had almost doubled again. So we almost touched 20,000 by mid-December. And here, this is really market sentiment running away, and the buying and the pushing the price higher, just fueling more buying and bringing in more buyers. And this shows you just how important market sentiment is. And to bring ourselves up to date, I think we all know what happened next. 20,000, just below 20,000 ended up being the all-time high. And since then, the price has sold off. And at the time of recording, was trading just below 4,000. So we've seen market sentiment in both directions here. The fear of missing out, driving the price up, and the fear of the price crashing, just bringing out more sellers. It's an extreme example, but it does show how important sentiment is. And just one more recent example, the Turkish lira crisis in 2018. So there were real concerns about the Turkish economy, and we saw what was effectively a run on the lira in August 2018. So this is US dollar, Turkish lira. When the market chart is going up. That's US dollar strength. And you can see it came into July trading around about 4.5. So one US dollar was worth 4.5 Turkish lira. But then fear really gripped this market, and we saw sellers of Turkish lira and of course buyers of US dollar. So the price went from 4.6 to briefly as high above 7.2 in mid-August. Since then, the price has calmed down, but you can see just how sentiment can really grip a market and how fundamentals and normal news flow can be disregarded as that sentiment